Welcome to this week's episode of Your Stock Request for the 11th of June. Hi, I'm Michael Gable, Managing Director of Fairmont Equities. Your Stock Request is the weekly video where I take your requests and analyse the share price charts. So this week we have Inghams, Senex Energy, Pantoro, Flight Centre and Inghams. So if you have a request, send it through. Make sure you've signed up to the free newsletter. If you enjoy these videos, we'd like you to share them on social media, or even leave us a review on Facebook and Google. Remember, if you need further help, please let us know. Inquire about our portfolio management services, and just remember, any advice here is general only. So daily chart of Inghams. So what I've noticed is we've had this sort of double bottom get formed just above the October low, which is a good sign. So we've seen a nice bounce here. Possibly we've got a bit of a breakout here if we draw a trend line there, but there is still a lot of resistance here. So although this might indicate momentum might start to pick up now, it might just be hard going to get through these levels. So it'd be worth keeping a close eye on. I think if it starts to fade in the next few days, then that would be a problem. So Senex, it's trading pretty well since the March lows, so fairly sustainable. And the reason why I say that is we had quite a big jump here, but then it sort of consolidated that move by trading sideways, and then clear breakout here, and now it means it can continue higher. So so far so good. I think there's obvious resistance at 30 cents. It looks like previously there was support there, so a little bit more upside to 30 cents, and then that'll offer some resistance. Pantoro, so if I just go to a weekly chart, I've noticed that if we have a look at how far it's recovered off the lows, it's right at the 50% retracement level, so we may see some resistance here. I mean, looking at the daily chart, we can see that last week it did pull back quite a bit after hitting that 50% retracement. But a positive is in the last couple of days as it's jumped higher, that's been on much improved volume. So, that's a positive sign. I think, in terms of the next sort of buy signal, you really need to see it crack 22 cents. If you can get through that old peak, then that would be the next buy signal. Okay, Flight Centre. So a few weeks ago, at the end of May, we saw it finally push through this April high. It was up until it sort of managed to sort of push through. It was looking pretty weak, so it's now kicking on, which is good. So it's basically cracked that level, consolidated a bit, and now it's properly moving. So look, it's not a company that I'd feel too comfortable investing in, but if we're just looking at the chart, I think the chart looks fine here, and it looks like it'll have some further upside. We just have to see how far it can run, but for the moment it's looking okay. And finally, Inghams. So off the March lows, good rallies, so fairly impulsive move up, corrective, and we can see the moves higher have been more and more impulsive, which is good. Most recently we saw it gap up here and then consolidate within that range. So if I zoom in, so basically after gapping up here, instead of pulling all the way back, by consolidating within the range of that particular day's price action, which is a positive sign. And then we could see yesterday it's trying to break out of that now. The concern would be, in terms of trying to chase this, we've got this gap here from January, and we can see that's where it's offered some resistance for Inghams. So, ideally we do need to see it push through this 240 level, and that would be a much more positive sign. But so far it's looking like it wants to head higher. Just have to see what this resistance level will do to it. Okay, that's all for this week. If you have a request, send it through. I'll try to include your stock for you.